This is the Retirement Bullpen with Richard Warner. The team at Warner Financial Solutions want to help you feel confident about your retirement, no matter where you stand. Get more at warnerfinancialsolutions.com. Now, the Retirement Bullpen.
Welcome to the Retirement Bullpen. September is Life Insurance Awareness Month, and as you might guess, today we are diving into a topic that often gets overlooked in retirement planning: insurance. Whether you're nearing retirement or already enjoying your golden years, understanding how life insurance fits into your financial strategy is crucial. Here to help us navigate the intersection of insurance, legacy, and long-term care is our host, Richard Warner. Richard is a certified income professional and owner of Warner Financial Solutions. Be sure to check out the website, warnerfinancialsolutions.com. Sign up for a newsletter. You can also find additional podcast episodes and, of course, sign up for a complimentary consultation. You can also call at 402-274-9185. Today, again, insurance planning in retirement. Richard, it's always good to see you. Let's jump right in. How does life insurance fit into a comprehensive retirement plan, especially for someone who's not earning regular income?
Great question. And as with a lot of our topics, it's very case-by-case specific. So The first thing that comes to mind is debt. If people have debt, life insurance can be very, very important. So if something would happen to one, there's usually a loss of income of some sort, even in retirement. In retirement, that would be maybe if two people in the household, they're each drawing a Social Security, could be they're each drawing a pension. The Social Security, one of them will definitely go away. Pension potentially could go away depending upon how it's set up. So you have a need to pay that bill off to reduce your overall outgo, to be able to make ends meet, potentially. Again, it depends upon the situation. Some people have enough savings that it's not that important, but a lot of people don't, and they need that in place to pay that off. The other is, we kind of touched on, was just replacing income. A lot of people don't think of this, but when there are two Social Security checks in a household and one of them passes away, a lot of people assume you get to keep both Social Security checks. It's not how it works. You do not get to keep both Social Security checks. You get to keep the larger of the two Social Security checks, but one of them is going away. So you are going to lose, maybe in some cases, 50% of the income, at least Social Security income that's coming to that house. So if you're very dependent upon that Social Security income in your retirement situation, or you have large amounts of debt, those are probably two big areas where life insurance in retirement is very, very important.
Are there misconceptions that you see that retirees have about life insurance or the need for it?
A lot of people think when they hit retirement, they don't need life insurance. And there are a lot of cases that's true. A lot of people by that point have built up a lot of assets. And so if something does happen to one of them, they have other assets available to replace the income that is lost in that situation. So that can be a true statement, but a lot of people just assume, well, I'm retiring, so I don't need life insurance anymore. Or I have my house paid off, I don't need life insurance anymore. Life insurance can come into play with estate planning, final expenses, paying taxes, paying debt, replacing income, and even potentially long-term care is another thing that life insurance can be utilized to pay for in retirement, long-term care expenses.
That's focusing on those that are already retired. What about the flip side of that coin, which is people that are nearing retirement or maybe still have, a decade left? And what can you do, or what can clients take into consideration to assess their insurance needs as they're heading in that direction?
So if you're 10 years off from retirement, you still have funds that need to be accumulated. What happens if you are the primary earner in your household and you're not there tomorrow? Where's that income going to come from? That income needs to come from somewhere. Now, in those situations, it can be a lot more cost effective. You can do it for periods of time, which can save you insurance dollars. But it is vital in those situations to have a plan in place to replace income if something would happen, because none of us know when our last day is. Crazy stuff happens. Yes, statistics play themselves out most of the time. Most of us make it to a particular point, but there's a lot of people that make it way past that bring the statistics up, but there's a lot of scenarios of people that don't make it near that bring those statistics back down. You don't know when your last day is, so you need to have that in place to cover any potential debt, because you also wouldn't want a huge mortgage, for example, for your let's just use myself. Let's say I have a huge mortgage and I have a high income, and my wife, this is kind of actually a realistic situation. So when my wife stays at home. So if something happens to me, that income's gone.
Right.
And how is she going to make ends meet? Well, she needs life insurance to generate that income to get to that point we were trying to get to in the first place.
Do you find that that's a factor in why people maybe don't talk about it? Nobody likes to think about their last day or, not being there to see their grandchildren. But do you think that that's maybe a factor that,
for sure.
Let me bury my head in the sand and not discuss this topic because I don't want to think about it?
Nobody likes to talk about their potential demise. I remember the guy that first introduced me to this business years and years ago, the concept of financial planning and all that. I was just learning how to meet with people. I was young. I was meeting with a lot of people my age. And he said, I would have appointments and people would just cancel and skip. And he said, people will find a way to paint their house when you're going to talk to them about life insurance. All of a sudden their house needs painted and they're going to cancel their appointment with you. He's like, it is unbelievable the excuse they'll come up with because they don't want to talk about that, especially people in that age. I think as we get older, we become more aware, like it's inevitable at some point. I've been around for a while and you think more realistic about it. But yeah, I think that has a lot to do with it. Nobody wants to talk about their demise.
I feel like life insurance is right up there with talking about your medical wishes if something were to happen to you. Mm-hmm. People don't want to have that conversation, but I can speak from experience. My mom had pancreatic cancer, and I was so grateful as an only child that she had that medical directive in place so I knew what her wishes were, because it's already such an emotional and heartbreaking time to have been burdened with the, unknowing of what it was that she wanted to have done in her final days would have just been, I think, another level. So it's one of those topics we don't want to talk about it, but it really is necessary.
So probably the saddest scenario, and I won't use names, but I knew a lady whose husband passed away. This has been several years ago. I knew a lady that whose husband passed away, and she was losing his Social Security. She was losing his pension. He had no life insurance. Not only had they been married for years and years and years, it was her best friend, but so she's going through this emotional trauma, but like she doesn't not know what to do financially. Like she's just in a completely different state now. I mean, she went from a very comfortable life to basically destitute just because there was not a plan put in place for this day.
Wow.
And it can make it a lot worse. Obviously the money doesn't replace the person, but at least take some stress off of the situation that you're already dealing with that's stressful.
Right. We don't need the financial stress on top of the emotional stress that's already in the equation. Are there certain milestones or, financial health milestones or financial milestones that we should take into consideration to look at a policy review or trigger a policy review?
I don't know if there's necessarily milestones. I think you want to evaluate it every year as you're evaluating your retirement accumulation plan or when you're in retirement. When you're in retirement, a lot of times you're usually pretty set with what you're doing life insurance wise. You're probably not making adjustments. Although I run into people all the time that they maybe purchased a term policy when they were in their 30s or 40s that is running out. Do I keep that? Do I change it? And it really depends upon the situation. It depends upon the need. Do you still have a lot of debt? What's the income situation look like when you're gone? How much savings is there to supplement that income? There really has to be a strategy in place to say when one of you goes, because one of you is going to go.
Right.
And most likely one of you is going to go before the other one. It's not very often that you go together. Okay. So
only in the Notebook. Only in the movie The Notebook.
Yeah. When that happens, how are you going to live financially? Right. And so that's something we answer in a review every single year when we're meeting with our clients or prospective clients. How are you going to answer that question? And a lot of times they do have enough assets to make it work, but there's a lot of people out there that don't. And as you get older, one of the difficult things is you've got to be able to qualify for it. So the sooner you can get something like this in place, because your health isn't always guaranteed, and insurance companies, let's be honest, they want to make money out of this too. I mean, just being real. So they're not taking somebody that's going to die next week and giving you $1 million policy for a good premium. It's just not going to happen. You're probably not getting coverage. So at least at that level. I know people see all those commercials on TV. $1 gets you so. Yeah, There's a whole lot of behind the scenes fine print to that stuff. It's not lies, but it's not exactly what you think either until you actually get into the conversation.
I'm sure. And you mentioned that there's an intersection with long-term care and life insurance planning.
Yes.
Can you talk about that? So
this has become more and more popular for a couple of reasons. Going back to, we don't want to talk about healthcare. We don't want to talk about our demise, all those kinds of, well, people don't want to consider living in a nursing home either.
Right.
And so a lot of people put that off. And it gets really, really expensive to purchase long-term care insurance. And because of that, there's less of it in the industry. I think that has a lot to do it. A lot of it is it's getting really expensive. Insurance companies don't want to cover it. So over the last, probably decade or more, it has become very popular to purchase what we call hybrid policies. And a hybrid policy really just means the benefit can have multiple purposes. So for example, one of the complaints about long-term care insurance is, I don't want to purchase something that I may not use, I probably won't use, and I don't want to use if I do. Does that make sense?
Yes.
And I get that, why you don't want to,
sure.
I try to equate it with like fire insurance on your home, but when you do have a fire and your house burns down, you don't really, it's not that you didn't want the fire to happen, but you do want to use the insurance to rebuild the house.
Right.
When you go on claim with long-term care insurance, you don't want to use the insurance, even though you paid for it your whole life. You'd rather never use it. So what has become popular is the ability to use life insurance for long-term care. So basically you have a set amount. It could be a couple $100,000. It could be $1 million. It could be lots of different things, whatever you can qualify for and are willing to pay that fits in your situation. And that benefit can be utilized for long-term care, for home health care, for assisted living, for nursing home. And so you utilize those funds, a percentage of them each month can be utilized to help pay the bill. You're probably never going to have enough to pay the full bill, but at least to help pay the bill, so that you're purchasing an insurance program that you're going to use for something. Neither of those things you want to happen, but
of course,
one of them, it is inevitable. You're going to pass away.
Right.
And then why not, if I'm going to have that, why not be able to utilize it for this other expense if I do need it? But if I don't, it's going to go to my spouse or my kids.
To clarify on that hybrid policy, if you don't need it for long-term care, it's still there and can go to your spouse or your kids and be part of your legacy and estate planning, but it's there if you need it. Am I understanding that?
Correct. Right.
Okay.
You typically have to pay a little bit more premium for the same benefit to be able to use it for both, but it's not a lot more expensive and it has multiple purposes. Sometimes it'll even come to play that you have living benefits as well, like where maybe you have a disease or something like that, maybe a cancer or whatever.
Sure.
You can draw funds based on that as well. So you're maybe not going to a nursing home, maybe hopefully not going to die. You're going to get over this disease, but it allows you to be able to pull funds to pay for things that maybe Medicare wouldn't cover, special types of treatments and those types of things.
That makes sense.
Anytime you hear that word hybrid attached to like life insurance, it means it can be utilized for multiple things, not just death. The traditional thought of life insurance is when I'm dead, people get paid. And that's, again, going back to that conversation. Now we're talking about stuff that's going to happen when I'm not even here. Why do I care?
Right. Are there any insurance mistakes or pitfalls that people need to be thinking about as they're having these conversations?
Just making sure. I feel a lot of people get duped into things. They're told you need this, and it sounds good, but the reality is they may not need it or use it, or they have something that feels good, sounds good, but it doesn't fit in their situation. So just make sure whatever you do, the person that's recommending it for you is coming from the standpoint of this is going to benefit you, and you can see where that's going to benefit you in your situation. If somebody's just trying to get you to do something, they're probably trying to sell you something. Don't go down those roads. Make sure it's comprehensive in your situation and fits together with everything else.
And it's okay to ask questions.
It is.
We're not expected to know all of the answers.
Yeah. A lot of people are afraid to. They don't want to appear dumb. It's not bad to ask questions. Ask questions. People ask me questions all the time and they think this is a stupid question. I'm like, there's no stupid question. If you do not understand, I want you to understand if you can. Now, there's some aspects of what we do that some people will never completely understand, but they at least need to understand the why behind the recommendation and make sense to them that, yeah, that does make sense why I would do that, at least the why part.
So it goes back to that kindergarten rule. There is no such thing as a stupid question. Ask the questions.
That's right. There really aren't in this industry. There really aren't.
So as we've heard today, life insurance can be a tool that isn't just for the working years. It can be part of our retirement planning, our legacy building, but also looking at long-term care. So if today's conversation has sparked questions about your own coverage or your future plans, don't wait. Reach out to Richard. Start a conversation. You can learn more at warnerfinancialsolutions.com. Again, warnerfinancialsolutions.com. Click on schedule a meeting in the upper right corner of the page. It's super easy, super simple to navigate. You can sign up for a newsletter and, of course, find older episodes of the podcast as well. Richard, it is always a pleasure to pick your brain and get insight on these topics. So thank you so much. You hit it out of the ballpark. I had to make at least one baseball analogy pun.
That's all right. We both love baseball. So
we do. I'm sitting here with my baseball water bottle. So listeners can't see me, but I'm in it. I'm a baseball mom. So had to at least get one pun in there.
There you go. I like that, Alyssa.
Well, thank you, Richard. It was good to see you.
You too. Take care.
Insurance products are offered through the insurance business Warner Financial. Warner Financial is also an investment advisory practice that offers products and services through Impact Partnership Wealth, LLC, IPW, a registered investment advisor. IPW does not offer insurance products. The insurance products offered by Warner Financial are not subject to investment advisor requirements. NPN number 7617022. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This podcast is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be considered as advice designed to meet the particular needs of an individual situation. Warner Financial is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Warner Financial. Please remember that converting an employer plan account to a Roth IRA is a taxable event. Increased taxable income from the Roth IRA conversion may have several consequences. Be sure to consult with a qualified tax advisor before making any decisions regarding your IRA. IPW provides services without regard to political affiliation, and the views of the individual advisors are not necessarily the views of IPW.